Hey guys, you are back with Final and Education today, and we are gonna cover, as usual, Economics Year 1, Unit 1. And the topic for today is types of economy. So, this is a fairly easy topic as you've been learning it from before, and let's get started. So, basically, there are three types of economy, as you know, in any country. So, economies can be either free market. So basically, free market economy is where all the resources and goods and services are produced by the market mechanism, and the government has no role to play in the economy. So basically, all resources and goods and services are produced by the market mechanism. So no role of the government at all in free market economies. Next, we have opposite of free market, which is command or planned economies. So command economies or planned economies, both being the same, they are the exact opposite of free market economies. And here, goods and services are produced by the government. So the market mechanism has literally no role to play in it. Everything belongs to the public sector. And lastly, we have a mix of both, which is our mixed economies. As the name suggests, and as you already know, mixed economies consist of both public sector and private sector. So goods and services are provided both by the public sector and the private sector. So basically, majority of the countries in the world right now are mixed economies. Some are command, some are totally free market, and each of these economies have their advantages and disadvantages as everything else. So basically, for free market and mixed economies, we have more choice for customers. So these are basically the features or different types of advantages and disadvantages of the above mentioned economies. So in a totally free market economy, let's just call it FM. So in a free market economy, consumers are given more choice. Why? Because in a free market, everything is provided by the private sector, and all the firms in the private sector will be in fierce competition with each other, because or else they will be moved out of the market. They won't get any profits. So because of this, there will be a lot of competing firms, and it will ensure that a lot of choice for customers is present. So choice for consumers, one of the advantages of a free market economy. And then because of this, a lot of firms competing with each other will mean that each firm will try to differentiate its product from those of its rivals, and they will want to maintain a lot of quality and innovate their products so that they stay in competition. So this will mean that more quality and innovation, which will in turn benefit the customers. Again, from this, if there is more quality and innovation, and if each firm is trying so hard to survive in the market, they have to be efficient, cost efficient, production efficient, and every other efficiency that there is. So a lot of efficiency for the firms, which is a good thing for the economy. So more choice, more innovation and quality of the products, more efficiency from the firms, and also a more market oriented economy, meaning more free market the economy is, it is assumed that there will be more economic growth. So this is a different point. So the higher the market orientation basically in an economy, the higher will be the rate of economic growth. Because they try to be efficient, they try to maximize their profits, and so on. There is also the problem of inefficiency for planned economies. So this is for planned economies. Inefficiency will exist because, as we all know, that public sector is not very efficient if they are left alone by themselves. So if everything is controlled by the public sector, then there will be lack of competition because the government provides for everything. So the problem of inefficiency exists, as we all know. So basically these are the main points from this chapter, and as we have been doing for so long, let's move on to an essay question that we can expect in the exams from this chapter. It's not that hard. So one of the 20 marks essay questions that I had come across, and you can come across as well, is that you might be asked to evaluate the possible advantages and disadvantages of an economy moving closer to being a free market economy, or an economy moving from a planned economy to a more free market economy, or to a more mixed economy. So let's take an example. It's from one of the past papers. So the question was something like this: in 2007, Ireland's government spending as a percentage of their GDP was 35.9%, and by 2019 it had fallen to 25.1%. So basically, government spending as a percentage of GDP fell from 35.9 to 25.1. What does this mean? Government spending fell. This means that government involvement in the economy fell from 35.9 to 25.1%, which therefore means that the economy is moving more from a more government oriented economy to a more free market economy, i.e., it is going closer to being a free market economy. So the question basically was, evaluate the possible benefits of an economy moving closer to being a free market economy. Oops. $20 marks. So as you already know the drill, so here we are basically moving from a more planned economy to a more free market or mixed economy. So we will first, since the keyword is free market, we will first define free market economy. So a free market economy is where all the goods and services are produced by the market mechanism and there are no government involvements, as we have already mentioned. So we are going to define free market economy, and then we are also going to define mixed economy, because this is not exactly a totally free market economy. There is still government involvement of 25.1%. So we will also define mixed economies. There goes our definitions, and then we will talk about what we have gathered from the data. So basically, Ireland is moving from 35.9% government share to 25.1% government share as a percentage of GDP. So we are going to say that government involvement has been reduced by 10.8 percentage over the last 12 years. This is what we're going to say. So they're moving from 35.9 to 25.1. So government involvement reduced by 10.8%. So they're moving to a more free market economy. So that's how we introduce it. And then comes our analysis. So basically, we are asked to identify the possible benefits. As we have already mentioned over here, benefits of free market economy, we're going to write the same things. So we can talk about how resources will be more efficiently gathered. So resource allocation is more efficient because firms compete with each other, and they need to be efficient or else they will be pushed out of the market and go out of business, which they don't want. So that's why efficiency will be a big factor, and it will also mean that the economy will be efficient. That's how we're going to do. And then more free market economy means more competition between firms. More competition between firms mean, as we have already mentioned, more choice for customers. Another point can be, since there is more competition and firms try to be efficient, they will maximize their profits. Profit maximization by the firms will also mean that more research and development, so more innovation, as we have already mentioned in our notes above. More competition between firms will also mean that lower prices for customers. Right, these are everything that we mentioned in our notes. And lastly, we can also write, even though 4 points are enough, but I'm just jotting down points. We can also write how more free market economy will mean that lesser government intervention, so lesser inefficiency. We will explain all of these points related to the case given to us, and these will gain us 12 marks. Lastly, for the evaluation, which is 8 marks, 3 points are also enough. You can write 4. Firstly, the first evaluation point can be the fact that when there is more competition between firms, there might be a situation where one firm will be very dominant and it might start to gain monopoly power. So firm can get monopoly power, and if they do so, the firm will exploit consumers and charge very high prices. So that is a problem. That can be one point. Another point can be the fact that free market economy means that government involvement is decreasing. This can mean that public goods will not be adequately provided. So no provision of public goods or public goods not being adequately provided, which is a form of government failure or externality. Right? Because the free market or The market mechanism does not provide for public goods, does not provide for goods which have positive externalities because it's not profitable. So in that case, there will be externalities, there will be missing markets, if you remember from the externalities chapter, and that is a problem. So that is our evaluation. And similarly, building on this point, we can talk about how there will be under provision of goods with positive externalities, such as education, healthcare. And there might be over provision of goods with negative externalities. These are just points. Another point that you can write is the fact that the magnitude of the decrease in government spending is not that much spread over 12 years. So, the magnitude. Why? Because government spending did decrease, but it's still there. And the economy is not exactly free market, it's still a mixed economy. So these effects might not be very severe. So that's what you can write as a concluding point. So basically, Ireland is still a mixed economy because the magnitude of government spending reduction is not that high spread over 12 years, and therefore the effects might not be as extreme as you've written them down. So these are the 4 evaluation and concluding points, and they will get you 8 marks. And basically this is it that you can get from this chapter. It's pretty easy and straightforward, and just remember the points, advantages and disadvantages of each economy, pretty easy, and you will be good to go. I will get back with more notes next time. Till then, study hard and good luck.